Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, December 21st, 2009 through Thursday, December 24th, 2009. Well, folks, we are approaching the year-end 2009 period, and we had last week an options expiration week of wild trading. We saw the market up initially early in the week, only to sell off and close slightly lower on the week after whipsawing back and forth. We had up days, we had down days, we had whipsaw intraday periods, ultimately a perfect options expiration week. When you have an options X week, you expect the market to be volatile like this. In other words, whipping out the longs and the shorts on the amateurs all around those options. Now, again, what we have to remember is that as we come into the year end, you're going to see a little bit on the lighter volume side. However, that does not mean the volatility is going away. In fact, last week was more volatile than probably any day previous or any week previous in the previous month or two. It was a wild week of trading with great swing trades on oil and gold and all of those trades, according to the In the Money Stocks chief market strategist. Now, going into some stock analysis and some market analysis, what I want to do first of all is touch briefly on Friday's action and the technical levels. Then I'm going to get into other stocks that you want to be watching for next week. We're going to talk a little bit about the retailers in regards to the blizzard that has hit over the last few days. I think that's important to watch as well. We'll go into the chart and see what the charts are telling us. And also, I want to touch on Apple Computer, Research in Motion after Research in Motion's earnings, and Goldman Sachs, of course. Okay, so let's get started on the spiders. Here, this chart of the spiders on the 10-minute chart. And what you want to first notice, folks, is that late in the day we had that little bit of a surge up. That's just a little buy program due to options expiration. It looks to me like they wanted to get the SPY above 110 to have any puts below 110 that would have been in the money expire worthless. That's options expiration normal trading. Remember, options are a rigged game in general, folks. You have to understand it. It's a big boys game. The institutions sell the options. Therefore, there's a concerted effort often to close certain stocks or markets outside of their strike in the money plays. All right, so again, you can see that often. If you're trading right around a key level, for instance, 110 going into the close on a Friday of Options X, often they'll push it one way or the other to make sure it closes in the opposite direction of where most of the calls or puts are. So again, in this situation, you'd have to assume there were more puts at the 110 strike, so below here would have been in the money. The institutions would have had to pay it off. Therefore, a little bit of a buy program into the close closes those out of the money. They expire worthless. The premiums get taken by the institutions, and off it goes. All right, so now again, what you did do is close right up underneath the Great Wall of China upper level at 110.34. You have to be watching this Great Wall. We closed again inside this Great Wall of China. Now, the Great Wall of China is something that In the Money Stocks coined as a major level, along with the Iron Curtain, which is at the 112.30 to 112.50 level. These levels are massive, folks. Can't stress that enough. For those of you that are premium subscribers, you know how key the Great Wall has been for us in terms of swing trading and making sure that we understand closes above, closes below. What does that mean? Okay, if you go above that, what you're going to watch early next week is this pivot high right here. This will be a little bit of minor resistance come in on Monday. Monday right here at 110.60. If you get past there, 110.85. Past there, you have the 200 moving average. You have to monitor that. The 200 will be definite resistance, but ultimately the big level to watch on Monday or Tuesday of early next week will be these levels right up here. Why? Because you have gap fill right at 111. All right, right here at 111.50. 111.50 will be a key level because it's gap fill from this gap where from Wednesday to Thursday we gap down. Now, above that, obviously the 112 level, then 112.30, 112.50, and ultimately 113. Now, on the downside, folks, you're looking at a little bit of the lower Great Wall of China as minor intraday support. That's just intraday. All right, ultimately on the daily, this is a huge level, but intraday it's just minor. You can see the pivot low coming down into it right here. If you get through that, you're going to look at the lows here as being a key level, folks. The 109.25, 109.30 level, unbelievable right there. All right, if you get through that, what we have to do is refer to the 60-minute chart. The 60-minute gives us a little bigger picture of the key levels to watch next week. Number one, on the downside, easily watch this level right here. This is the 109.25, 109.30 level that I just showed you on the intraday. That is a key level, folks. That's why. See how they match up from the 60-minute to the 10-minute that I just showed you? When they match up, it tells you it's a big level. Underneath that, you're looking at the 109 level. All right, so 109 just below that. If you go above again, you have the Great Wall of China 110.34. Ultimately, look at this. The 20 is sloping down. It's going to meet this 200. That's going to tell you right in here where they meet is going to be a major resistance area should the market go up into that. And what a necktie is across at that point of two moving averages or two key trend lines. And at that point, if the market happens to go into it, it's amazing resistance. Ultimately, if it comes down into it and it was forming below here, then you look at that as major support, okay? But that is what a necktie is. It's a very important technical term that you need to be watchful of because when that does happen, it can be explosive in the reverse direction on a pullback and a great shorting opportunity in this situation. If you get above that, you're looking at gap window right here, gap window at 110.75, 110.80, and then ultimately all the way up to this point at 111.30, and then 111.50 would be gap fill, obviously. All right, so keep an eye on those, folks. Up here, you have the 112, then the 112.40, 112.50 area. Good resistance. Now, let's go into some other keys, folks. Well, number one, let's talk about what kind of earnings news do we expect earnings next week? Do we expect economic news next week? You do have some good economic news next week. Earnings-wise, there's really nothing of significance. GDP on Monday, existing home sales at 10 o'clock on Monday. So you have a little bit of news on Monday to drive the markets one way or the other. Tuesday, personal income, personal spending, PCE prices. Also, you have Michigan sentiment and new home sales that's on Wednesday. Wednesday, you have that. Check that. Now, that is Tuesday, my fault. Also, you have inventories coming out, then initial claims on Thursday. Initial claims will be on Thursday. So keep that in mind, folks. Again, the 22nd, you have some good data coming out. All right, so I just want to make that clear. It looks like actually I'm just looking at it closer here, and it looks like Monday there's no economic news. It all starts Tuesday with GDP, existing home sales, and then goes right into crude inventories, new home sales on Wednesday, ultimately ending with initial claims on Thursday, which again, by the way, Thursday, folks, is a half day. All right, half day closing at 1 o'clock due to the Christmas Eve time frame there going into Christmas on Friday. Markets are closed Friday, so realize that, folks. Half day Thursday, markets closed Friday. Now, the key is, again, going back to the charts, folks. I want to take a look at Amazon. Amazon's going to be an interesting play, and I wanted to touch on real retailers here, online and, regular retails like Best Buy, because you have to keep in mind this huge blizzard has hit the Northeast, all right, all the way from D.C. and North Carolina all the way up through New England. Now, the key about that is you have to remember there's a lot of people that wait till the last minute to go shopping, and there's going to be some problems, obviously, they're getting to stores this weekend based on this blizzard. And there may be a lot of people that now are going to the online source to see if they can kind of get stuff from Amazon.com, Overstock, a lot of these type of retailers to see if they can maneuver. All right, so just remember that. So my point was, again, taking a look at the charts, I still believe ultimately Amazon is going to go lower, but you may see a little bit of a bounce on it just based off of that. What you can see here is key break on the chart. Notice the connection of these lines going through here. Once it got below here, look at how it's faded all the way back down. This is going to be your target right down here. But again, as I said, maybe it gets a little bit of a bounce on Monday based off people rushing to online to purchase goods and services and so forth based on the blizzard that has hit the Northeast. In regards to that also, it'll be interesting to see how on the RTH, which is more the retailers overall, or you can even look at Best Buy here, BBY. Look at that fall on BBY. Wow, that's brutal, folks, as it coming down. That could see more weakness early next week only because people may be shying away from going out to those stores, instead ordering things online. So just pointing out some little odds and ends that you might want to be aware of. But one thing, again, that's a brutal fall on Best Buy. Let's take a look at Bed Bath & Beyond. That's another good one. And Bed Bath & Beyond has come in off the highs, but only down to the 50 moving average. That could also see a little weakness early in the week, possibly on obvious, thinking about the blizzard and so forth, hitting all the way from North Carolina, D.C., all the way up the coast in the Northeast. Now, let's take a look at Goldman Sachs, folks. Goldman Sachs really has fallen. And this is key, guys. I want you guys to really be aware of this, that Goldman and the financials topped out in October. Since October, they've been very, very weak. I mean, they've had small bounces here, but ultimately they have come down pretty significantly. And that has to be monitored. It really does have to be noted here because oftentimes the financials lead the market. So, if the financials are leaders by 2 months, then technically you could see this market top out here into the end of the year, and we'll see if it trades a little weaker. Now, again, we're covering a lot of this basic material and constant inflow of technicals through the research center that I strongly encourage you to pick up and look at and analyze. But overall, you have to be watching here the financials. What are they telling you? What are these financials telling you here by topping out in October? Again, if they're 2 months leading, then you could be talking about November, December, and then rolling over in January. Now, again, will that happen? That's going to be the question. Are we going to get an end of year little push based on window dressing as well over the next 2 weeks? That's possible as well. Tune into the research center to get all this information. We cover it in depth. We've had huge calls in the last week, folks. We called the bounce on gold on Friday perfectly as a swing trade. The bounce on oil late last week, we nailed that perfectly. And again, I'll show you here quickly. GLD, this was the obvious buy price. We nailed it literally to the penny right here for the bounce on Friday for our premium members. Nailed that. Money in the bank. USO, told everyone to buy right here. Look at the bounce on the USO. All right, these are just a sampling of calls, huge calls made throughout. Obviously, you want to come join that research center, folks. Also, the chat room's always fun. Just because it's towards the end of the year doesn't mean things are stopping. There's tons of money. In fact, last week was one of our most profitable weeks of the year, and you want to be in on that, folks. Trust me. Have a wonderful day. We'll talk to you soon. Take care.